Good morning, everyone, or good afternoon, good evening, good day. My name is John Love, and I work with the Motor Carrier Insurance Education Foundation. This is Truck Stop, which is our 45-minute or so webinar where we talk about an issue, an event, an important aspect relating to the trucking insurance industry. And we're happy today to delve into what do we call it? The cabbage, the dollars, the way things happen. That is the issue and the industry of premium finance. I have with me today three experts, three stalwart experts, three good folks, three great supporters of MCIEF. And I'd like for them to introduce themselves right now, and we'll go in alphabetical order. So that would be Drew, then Justin, and then Niles.
Certainly, I'm Drew Easton with Amwins Transportation and Amwins Transportation Underwriters. I apologize. We are huge fans of the premium finance relationships that we have, specifically with Justin and his colleague Holly. It is a big part of what we do. Let's be clear, I'm an insurance underwriter. I am not a credit provider. So anything that has to do with the figures as far as the collection, et cetera, I would prefer to have a key partner that will allow me to focus on the underwriting and then focus on those monies and those the finance exposure. I would also say that one unique thing that we experience on our side is this is not the typical win-win situation. This is a win-win-win-win situation. We've got a motor carrier who's able to get the coverage placed. We have a retail agent who's able to place the coverage. We have the intermediary like myself. I'm a program administrator. And then we have a key partner like Justin who is able to reap some of that benefit as well. So this is one of those unique scenarios where we've got multiple parties that are enjoying success from the fruits of the labors of four individual folks.
Drew, I just want to buy whatever you're selling all the time. Justin Berry, First Insurance Funding, Regional President of the Central and the Midwest states. John Love, really appreciate the MCIEF support. I believe it's also National Transportation Driver Week, so thanks for all the drivers that are out there, and I'm sure you're making sure all their gift baskets are in the mail. Our company, First Insurance Funding, we're publicly traded. We're the largest in the space. We write $15 billion. The specific vertical on transportation is our largest subset of an industry. It's one of the most utilized facets overall, with combining obviously your risk management and the components from Amwins to CoverWell, of the agents. So partners are key. So we're glad to be here. We know this doesn't always rise to the top of the fishbowl as something as a vital piece or the most important, but it is truly only necessary to be important when it's a problem. And that's why when you do have great relationships, as Drew had mentioned, his direct relationship with his account executive or his relationship manager on our side, Holly Littmeyer, that it all does make sense. So we are glad to be here. We thank everyone. What is there, 700 people on this call to talk about premium finance and the relation piece of it. There's not 700 people, so.
Well, there might be. You don't know.
Yeah, they're in rooms, right? They all logged in, 100 people in one room.
It could be. Will be. After this, there'll probably be 7,000 people from here on out.
Well, they want to hear more.
Yeah, that's right. Niles, how are you?
I'm doing well. Thank you for having me, and thank you for letting me serve on such an esteemed panel with my friends Justin and Drew. So Niles Oppenheimer, CoverWell. I'm the head of growth. For those of you who don't know CoverWell or aren't already working with us, we're the fastest growing insurtech in North America. We focus exclusively on the transportation space. We've written north of $600 million of premium, and almost all of that premium is premium finance. So we are intimately aware of the benefits of premium finance and what that means at the point of sale, and also having the right partners to help you deliver on your initiatives. And both Justin and Drew are great partners of CoverWell, so look forward to digging into this a bit deeper with everybody.
Thanks, Niles. Thanks, Justin, and thanks, Drew. I can tell our audience listening today that as the four of us talk, we thought that it would be probably more important to talk about the importance of a relationship, about, to Drew's point, getting something done to make something a quadruple win, then maybe on a webinar we were talking about the specific mechanics of premium finance and how it works. However, Justin, I think we should cover some basics of how the industry works and what's the thought process. And as an expert, and of course that's your job day to day, take us through premium finance as an industry, and then why it's important for our policies.
You know, that it does, just to give some basic lay of the land. The construction of premium finance, you know, it's driven out of the fact that organizationally there's carriers that don't offer payment plans, or some that do, that don't offer payment plans that are as necessarily advantageous to be able to provide the required cash flow to the insureds, whether it's a single unit or 100 units. They are all leveraging, you know, they're on 30, 60, 90-day, you know, pay cycles of getting returned on, you know, getting paid for their driving, their miles. So it's, you know, a simple relationship of us to have with a broker, an MGA, an insurtech, that we will pay the premiums in full to the carrier. The carrier then will, you know, qualify us as owning that liability for any return premium, and then the insured is paying that monthly payment to us, and that then takes out then for any workflow in regard to the agent. That income that we generate from that, you know, goes to a split between usually the agent as well, or the insurtech or the MGA, where they have some type of fee income stream built into it. What is qualified is probably the most important part of what our services we provide, is allowing for cash flow and giving them the lowest down payment. So that is usually what we see within regards to a request is, you know, how can we get to the lowest down payment possible?
And really, isn't that it, Drew and Niles? You've got the best quote, or maybe the second best quote. You're close to writing the business. The business, the trucker wants to purchase from your quote, but now it's a matter of arranging the dollar particulars, correct?
Absolutely, and that's spot on with what Justin had mentioned earlier, that, you know, we don't want to talk about it or worry about it until we need to, and they truly are problem solvers, Justin and his team. And I can think of numerous examples, but there's a couple I'd like to share with the folks where their involvement was key to our success. We had a particular risk that was coming away from or we were trying to quote it away from an insurer, a competitor that had a reporting form policy. And the particular market that we were utilizing did not offer that option. And as we know, those of us in the industry, when you have a reporting form policy, you're trying to pull that away, you've got this deposit money that is sitting with that current insurance provider. And they can hold those monies up, waiting for the audit to be completed, et cetera. So they use that as leverage in hopes of retaining the business. Well, in this case, we made a quick phone call to Holly that Justin mentioned earlier. She's our key contact, and she was able to work with us on that down payment that we were going to utilize, and also favorable terms on the rate to have the financing allow us to win this business. And I will say we weren't the cheapest, but we were close enough with the services that we provide in the market that we brought in to win that business. And that's tremendous. You know, when we're trying to or compare apples to oranges many times in our industry, and in this case, we were able to make that orange look a heck of a lot more attractive than the apple. And that's the way we worked here. So it was really key to our success. Another scenario, which was a little bit, I don't think a lot of folks recognize this opportunity. Most of the retail agents we work with, they have an existing premium finance relationship. Could be through Justin or some of his competitors out there. But because Holly can be creative in her underwriting of our risks, she can look at Amwins many times in the aggregate. And we had a scenario where we were able to improve the financing that our retail agent had by utilizing the relationship that we have with First Insurance in this case. So there are some key components to the relationships, John, that you talked about early on, that allows us to have these conversations. The one thing I would also suggest, that when you're looking for a partner in the premium finance, you want somebody you can pick up the phone and talk to. Much like retail agents like to be able to pick up the phone and talk to me, I want to have that ability to pick up the phone and talk to my key folks, to walk through the scenario, to walk through the underwriting, to explain what is happening here, and not just have a number of numbers thrown into some portal and a magic rate appears. That's not underwriting, that's not relationship, that's not premium finance, in my opinion. So those couple of examples were key to our success in writing a new piece of business and also retaining a piece of business.
Well, hey, look, from everything that you said, we could go down any of the roads, and we're going to go down several while we're on the phone today or the call today. But Drew, actually, what I heard you say, what you have to have is somewhat old-fashioned.
Very much so.
In a very fast-paced, technically and technologically driven environment. The relationship that you have relates to whether or not you produce income.
Absolutely, John, and that's well said. Technology is a tool. It is not a relationship builder. And I suspect Niles has similar experiences on his end as well. And heck, he's a lot more tech than I am, but tech is not the overall deciding factor of what we do.
Well, that's a very good point, Niles, and we'll lead you into it. Your firm is very, very technology driven. Yet, I heard you say when you were introduced,
It's funny to listen to two perspectives you'll have between Niles and Drew, in regards to the fluid relationships that, our ability to be able to also have a relationship plus provide best in class technology integration. Organizations are looking for efficiencies. It is became a different buying, process for many. Some still in, the old-fashioned ways, and some of the more technical fashioned ways. That's one thing I'd say about us is we try to meet, all the needs head on. Of whatever that process needs to be for their buying strength, we're going to be able to provide the solutions for it.
So generically speaking, Justin, the point is you have customers, and you have to be able to meet your customers' needs, and they're not all the same. All the customers don't have all the same needs, even if they're coming to the grocery store to buy the same groceries. They shop differently.
That's what we've seen, especially through COVID. That changed the dynamic drastically of people's buying processes. So we felt like we've met it head on. I guess that'll be for Niles to say on the technology side. Obviously, with their growth of 600 million, that's what some are buying from, or many are buying from. So,
well, evidently, a lot of folks are buying from when we get to 600 million. So, hey, Niles, tell us about, take the conversation forward with regard to your relationship, technology, and the success that the right relationship has brought to your firm.
Right, and so I'd say I am the most tech forward. I work for the most tech forward firm on this call, and even I recognize that there's no amount of technology that's going to replace relationships. So to Justin's point, right, everyone shops differently. The needs of each agent are nuanced. The needs of the policyholder are nuanced. So for us, it's about finding the right marriage of speed and that relationship that can get you to a nuanced solution when needed. And so, Drew had mentioned, a couple of examples where First Insurance Funding had stepped up and provided a really creative solution to allow somebody to, place a piece of business. And I could go on and on about, similar scenarios. But for us, I think another really telling component of just how strong this relationship is, in addition to the technology that we have to provide that speed to execution, is post-bind. Right? I mean, in the transportation space, is a fickle business. Cash flow is challenged. An individual can have a truck in a shop for many weeks or many months, but they still have financial obligations. And I can point to a number of scenarios where First Insurance Funding was able to work with CoverWhale to help a particular policyholder that was short on cash or going through a difficult time for some of the reasons that I described, to restructure a loan to keep them in business and allow them to maintain the coverage that they need to operate their business. So for us, yes, technology is king, right? And that's how we were able to scale 600 million in premium. But in reality, we can't do that without the right relationship supporting on the back end, having somebody to pick up the phone and talk to and address in a nuanced way when there's a need for it.
So very interesting. So Justin, I mean, you guys take a tremendous amount of risk. You're analyzing credit all the time. Take us through some of the thought process about how you handle what Niles just said. I mean, because it's pretty much news to a lot of folks. You're telling me that we've got a payment issue with an account, Niles. That's what I heard you say. And yet, what I'm hearing you say as well is that you have a spot where you can go to address that need if it makes sense to the entity taking credit risk. So take us through that, Justin.
Well, risk is our game, but transportation specifically has probably the first or second highest percentage of cancellations, or the terminology of not making payments. And it's one of those industries that has some regulation as well, that we have to follow certain state and federal guidelines. So that becomes a little bit tricky. But organizationally, what we find overall in our premium finance business, of our 15 billion out there, most people pay their insurance premiums. They want to pay their insurance premiums. That they take those loans out in good faith because of the insurance risk protection needed to run their organization. So it is a minimal level of total bad debt overall. But as you can imagine, with the transportation industry being so focused in smaller number of fleets, or the higher the more less risk. But I mean, we just saw, I think it was Yellow that went out of business. So we do manage our best to mitigate the risk by aligning terms, where that includes the down payment, the number of installments, to the expected potential chance of that turning into a good or bad loan. We often can miss, and we can adjust as we change through our processes. But it does take the communication and the data and analytics. But from Drew and Niles' perspectives, we help out the agent more than we help out the insured, because we don't even get to the detail of the insured many times. Now, for larger accounts, we do get financials, and we can evaluate those. That can help us understand certain situations, and that can allow for us to put more of a white glove approach. But truly, the favors when they're asked, or the things we're doing for their insureds, it's because we trust them. And that's a key component of when Drew's asking something, or Niles is asking for something. It's because that trust has been built there.
Justin, if I can jump in there for a second, from your perspective, and aside from the good looks that Niles and I share, what is it you're looking for from a partner on our side? What is it that we should be doing to put you in that best spot?
Well, you guys, I could just describe you both. Honestly, it's because we all like each other. That helps out a lot. It's great to be able to answer a phone or pick up a phone call, and you're not going to be, where you're going to get to the truth. You're going to get to the issue. It is a two-way street. I believe strongly in that win-win. You added a fourth win, win-win-win-win-win. That if you're looking out for each other, it just makes the ease of doing business to make shift that where you're not always calling to do us harm. We'll take risk for our in the situations, but it's that overall we're getting both a two-way street of working together. I mean, you define your organizations. One for us is that you yourselves have very high standards for the clients you're working with. You have policies and procedures set inside your organization. You're managing a premium finance program within all of those pillars by design. You're controlling it from making sure that the insureds aren't taking advantage of situations, that your producers aren't taking advantage of situations. So it's that stellar valuation of like, this firm is running a great shop, a great organization. And that's when we really can shine to do things that are out of the ordinary of those particulars. You're going to say, wow, I can't believe you guys did this for us. It's because we did 99 other things that were good for both of us. And then there's one thing you did for us. There's one thing we did for you. It's a great relationship. So it's hard to think of other ways to say it, but it's that infrastructure. It's that performance that you guys, it's organic growth. We're all working together to make things happen.
Listening to all three of you, the truth is this is a very generic conversation about doing it right. And I remember a long time ago, before any of you were out of diapers, I asked my father about a very successful competitor on a personal level. And I said, does he tell the truth? And my dad's answer was, I've never heard him lie, but you have to ask a lot of questions. And the point as that relates to the relationships that I think every good two firms must have, there are times when you should not be asking the favor, Niles, right? And you know it, so you don't. So the point back to Justin would be is that when you're asking a favor, you're asking it because of your knowledge of things that he doesn't know that are good, that make sense, that have not just an emotional tie, but have a reasonable financial consideration that you're asking him to make. So from my perspective, what I know about Drew and what I know about Niles on a personal level is what you want to say about everybody that comes to you, Justin. They tell the whole truth. You know, omission is a crime. Omission is you could redefine it. You leave something out that's important. What does that mean? That means you're hiding the truth. So you would much rather, I don't want to put words in your mouth, but if you end up short on a deal, as long as you know that was a decision everybody made eyes wide open, it'll happen every once in a while, but it won't happen over the history of a relationship time and time again, correct?
Oh, absolutely. Other than with your wife, emissions are okay, right? I mean,
You mean current wife?
yeah. She can't hear me right now. No, you're absolutely right, John. You know, I was just trying to break this down a little bit. First of all, I don't know if I thanked you enough, John. This is just awesome. I know you know how much I respect you, and Drew and Niles, you guys are just, it's helpful because premium finance isn't thought of very often as one of the solutions in the overall equation. And you know, we're hearing it from Drew to talk about a very different respect from not being just a retail agent, that we normally work with on a daily basis 95% of the time. These are very two unique organizations that are saying, we've been able to branch out and to say we are solution providers. You are solution providers, Drew, Niles. You guys said, okay, where has it been to be able to get the right opportunities to make this all happen? And you guys probably do this with all your vendors. We normally don't always get to this level of always having this relationship. We want it. I'm sure you guys want it all the time with your clients and Drew, your retail agents, and Niles, your retail agents. We don't get that all the time. So, this was also by a thought process, John bringing in a leader in the insurtech arena, driving 600 million in premium, and Drew, a leader in, with his process is working with retailers and the size. I mean, you guys are privately held. Niles, you guys are privately held. We're publicly traded, but our leaders really still at the helm. It's cultivated at the culture of the organization. So I mean, that's probably, at the end of the day, when you're thinking about premium finance, it doesn't come to light all the way to be the most important part of this, but you can tell that it is something of the equation. And that's why John brought this to allowing us to speak today. So I don't know if you ever open it up to questions of the group, or if we want to try to.
I've got a couple of questions here, so I'd like to pose them and then see how we can respond. One, Drew, goes back to your point earlier about an escrow deposit versus a down payment. And although that's an easy distinction for you to make, go back to your example where you were talking about an escrow deposit being held by insurer A, and then when you present it to the ultimate customer, a different scenario, how that impacted their cash flow. Or let's distinguish between the down payment and the deposit.
Certainly. Well, on a reporting form policy, in this case, it was an arrears reporter. And what that means is that the motor carrier is going to make payment for those miles or that revenue or whatever the exposure was after that exposure had occurred. So in order for an insurance company to offer something like that, they're going to want to know that they've got monies in hand should the motor carrier decide not to pay for whatever reason, or should they go out of business. And also recognizing the vast majority of business that we write, they have a filing that's posted. So there's some requirements that we have to give notice to the Fed and to everybody else that may have a vested interest that this risk no longer has insurance coverage. So those deposit monies are truly held as deposit or as escrow, as people talk about, only to be used if necessary. Well, at the end of the policy period, since it's been reported, more than likely there's going to be an audit conducted to confirm that those reports that were received by myself and by the insurance provider marry up with the actual exposures of that risk. And so those deposit monies are still held until that's completed. And in many times, COVID was mentioned before, we see things going 30, 60, 90 days after expiration for that audit to be completed. So you've got a motor carrier who has this chunk of money, which is typically roughly around 25% of the overall premium, being held by that former insurance partner in my case. And we were able to come in and utilize a deposit. The market I was using did not offer reporting form. So we were able to use a deposit, which is basically working money towards the end of that premium. So the difference there is a deposit can work towards the premium ultimately paid by that insured, whereas I'm sorry, I've got that.
You got it back. I was going to correct you.
A down payment was used in my scenario that is used towards the payment of that overall premium, where the deposit monies are not. They're just simply held until expiration of the policy and the audit. So in our conversations, we were able to be aggressive on that down payment, knowing that these deposit monies were going to come out, knowing that the motor carrier was in good standing financially and all other indicators were solid. So we all felt comfortable that a smaller down payment was all that was required to get that business placed.
I think you've described generically, in my experience, how a deal like this can be successful.
Right.
And you know, really, there's no question that irrespective of the size of the account, what a payment plan does is require money in addition to premium.
Yep.
The escrow deposit is a non-working, non-commission item, and it only becomes a commission item if there's a problem.
Right.
If somebody doesn't end up paying all the premium that the contract called to be paid. And then you've got to back the deposit out as a non-working item and handle it mechanically, which is a complicated thing, to turn it into premium. And then to your point, you're adjusting against voluntary reports, which absolutely have to occur after the policy is expired.
Yep.
So now, you know, the trucker's going down the road, it's next year, but they're still dealing with last year.
Yep.
In the instance of your premium finance, every dollar that we're talking about in the down payment and in the monthly payments, that's a commission premium item. So it's easy to see in the total scheme of things, not just the cash flow, but the total dollar outlay that contractually is required to pay your premium one way, reporting form, versus another way, premium finance.
Yep.
So if once again, back before any of y'all were born, my question was, well, if you've got other ways to pay the premium, why would you want premium finance? And the answer is, it's the best deal for the insured because it meets their cash flow needs. So there's a whole lot to be said for, and to the point of your success, Niles, did I hear you say that every dollar of covered well premium is financed?
Just about.
So obviously, back to the point that we mentioned briefly, very technically speaking, I'm assuming it's quite wired. It being that aspect of what you present to your retail agents is quite well wired into the quotation process.
Yeah, that's correct. Everything is seamlessly integrated at the point of sale, and that speaks to a lot of the technology components of what we were talking about earlier.
Niles' integration is very customized in comparison. They use they use APIs basically to pull data back and forth. We have thousands of email or API communications, reports, data analytics going back on a daily basis. It's pretty a wild, from building it out beginning to end was no small task on either part, organizations. But that's that's really kind of what we see with a lot of firms is they may want a simple integration just through their agency management system, or an advanced level API that's going to have a lot more detail. They can do it by risk alignments of years in service. So it is it is much more than a standard integration people would see by hitting a button in your agency management system and getting a premium finance quote. It's to the detail of risk adverse situations and things like that.
I get it. So what I was gonna, while I was listening to you, I was thinking, here's something all three of you have in common. I'm sure that everybody looks at a past due or an aging report regularly, because we don't have any problems unless somebody doesn't pay. Isn't that fair to say?
Yeah.
It's not a hope pray situation.
Yes. Well, I mean, to your point, that's correct. And what another generic observation, and it's not true of every firm, but it would be this, that insurance agencies are generally good insurance firms. They have good insurance knowledge. But I wonder about the industry overall with regard to their expertise relating to collections. And honestly, I think I've seen more small firms not prosper because they weren't good at the latter. They weren't good at collecting the money that they were owed. And in some respects, aren't we talking about shifting that responsibility? I mean, the truth is, Niles, I think this is true. When CoverWell buys a premium finance policy, aren't you looking for your partner to be responsible for the aging of what's owed?
That's correct, but also just to elaborate on what Justin had mentioned earlier around the complexity and the bespoke nature of integration, we've actually been able to integrate in a way that, in large part, removes the responsibility of the agent. We actually go directly to the policyholder and give a true direct bill experience, and that wouldn't be possible, right, without a partner that, one, understands the space that we play in, but then two, has the capability and the willingness to kind of support our business model. So I think that's what Justin was getting at, that they can support, or having a partner that can support your model is ideal. And in the case of First Insurance and CoverWell, like, we have a really intricate relationship where we can facilitate a more seamless payment and collection process to give a better outcome for everybody involved in the process, right? So obviously for the policyholder, policy stays in force, right, because they're in good standing. For the agent, the policy stays in force, so they get to retain their commission. And then obviously for CoverWell and for First Insurance funding, we benefit, because that policy is carrying out the term.
John, they
So,
often call it the Amazon experience, like keeping it all in the same ecosystem, not taking you out of their website. So you're embedded to be able to do your payment. The biggest, I think, solution we can provide outside of terms is utilization and minimizing that friction. So whether it's being in the ecosystem embedded, in a model like an InsurTech where they're making that decision on the fly quickly and they want to be done and it be completed simultaneously, or with Drew where he's like, hey man, I got to help you guys. I got an idea. I want to win this. Here's the piece that we're not, meshing on. This is a great relationship. Can we build this? Can we give you guys some help here? And that's on the premium finance side. And that's where, it's more of that communication, but both
so
are simultaneous.
what I'm hearing you, I think, say, but everybody, is generically, if time is money, and it is, time is money. If we're efficient in how we deal with our collections, and that's what you're talking about, being very efficient, aren't you really eliminating the leakage and the seepage and the redo and the duplicative communications, and getting right to the heart of the matter, which is, I need to collect this premium now? And you're getting to a very direct point of being able to do so. It should, by logic, right, improve your collection rates, or decrease your past due rates, I would just assume.
At least in the upfront basis, absolutely. CoverWell's model is beginning to end. Electronic signature, payments are collected electronically. We're verifying all the way through to make sure those payments get collected. So it's a very upfront way of trying to protect or mitigate the chance of that account going bad. There's no reason that Niles probably wants to use his infrastructure, his team, to put on business that's going to go away. So, that's our job with the same with, Drew, is we want those payments to keep coming in for our sake, because that pays our debt down, but for your sake as well. And we do see a correlation with a higher retention with premium financed accounts, because we do have that white glove level of control and saying, here's the scenario Drew just laid out for me. Here's the scenario Niles laid out for me. We need to make this type of adjustment, and this is going to help everyone keep the account intact and retained. So it does see a higher retention level. I probably, since it's being recorded, I won't put any numbers around it, but what I've seen is, by organizations, they see will have a 88 to 92% retention of accounts on a yearly basis from a retail broker standpoint. And when it's involved with premium finance, we could be either 2 to 4% higher than that. And obviously that 1% is multiplicative. It's water to steam. It's a huge bottom line driver if you can increase your retention by 1%. So
nothing makes a good insurance person cry more than losing a good renewal. Is that fair? And hey, listen, Drew, I've known Amwins for a long time, and without looking at the statistics, I know that Amwins renewal retention would be as good as any entity that you compete with in the whole country. So the point would be is that every different thing you can have in your quiver is exactly what you need. Is that correct?
100%. And to point out some of the comments Justin made, first and foremost, I am not a finance guy. I'm an underwriter. I like that kind of risk. I don't like financial risk. So if somebody gets into my pocket at Drew Easton Banking and Trust, I'm going to collect kneecaps if there's a bad account. Now, Justin, on the other hand, he's got that white glove service. He's going to be more accommodating and nice, and he's going to give them an opportunity. So there's a difference between us for a real reason.
Hey, I never thought of you as a callous sort. I mean, that's what I'm kind of hearing as we maybe come to the conclusion. I'm not sure it's the best marketing for you or your firm that you've just held out there. We'll do a disclaimer after this whole thing is over, if that's okay with you guys. I don't want Drew to spend all this time and then, people be, bashful when they're talking.
Drew wouldn't be Drew if he didn't cause trouble.
No, I'll tell you something about, once again, to kind of, we've answered the questions, give or take, that have been asked of the audience today as we've spoken. Before we go away, do y'all have a good closing mantra that you would, to everyone out there in TV land, so to speak, that you would, that you'd state about what it is we've talked about today? And we'll go in reverse order. We'll go Niles, then we'll go Drew, and we'll let Justin close.
I mean, for me, it all comes down to cash flow management. We all play in a space that is challenged, and I think it's even especially more challenged today in our current economic environment. And providing flexibility, providing choice, providing nuance allows agents to win. To Drew's point, it allows carriers to win. It allows policyholders to win. It allows everyone to win in the value chain. And to me, I think that's ultimately what we're talking about here, right? Trying to sell more, keep more business on the books, give better outcomes to your policyholders. And to me, premium finance and the relationship we have with First Insurance Funding is a prime example of how that helps you win.
Drew.
I would agree wholeheartedly with everything Niles mentioned, and I would really enforce the relationship issue across all aspects of our vendor partners. And I really prefer the term partner versus a vendor. They're not usury. They truly are hand in hand with us as we go through the stages of our careers and the stages of a policy. So again, Niles, well said. And I would just emphasize that partnership piece.
Both of you well said. I'm so glad I'm going to be able to keep on trucking to be able to say this, because that's Drew's saying that cracks me up every time. I really would only add that on top of the relationship piece and the organizational and the operational is take the time. It is a partnership. What we believe in all facets is build a predictable, sustainable model that is inclusive of all aspects, and it'll benefit the entire organization. to include all the stakeholders like your insureds and your partners and your employees. And at the end of the day, we do want to build out what Drew mentioned earlier, that when and the when and the when and the when. There doesn't always have to be a loser at the end of the day.
Well, talking to three winners, I want to thank you for spending time with us today. And before you leave, can't help it. We're very much looking forward to seeing each other face to face in Orlando, Florida, at the Hyatt Regency International Hotel at the Orlando International Airport, coming up October 3rd through 6th. And let me tell you, everybody watching, Drew's going to be there, Justin's going to be there, Niles is going to be there. Their firms, AmWins, First Insurance Funding, CoverWell, will be at this conference in force. So a business relationship that you're desiring to have with these entities and this type entity, the folks that really, I say, do it right, is what we're hoping that we give you time to accomplish when we get to shake your hand and see you face to face in less than 3 weeks.
Well
Thank you for
said,
being
Joe.
here today.
Appreciate it.
All right, everybody, thanks a lot. Have a great day, and
You too,
we'll
guys.
talk to you soon.
Take care.
Bye.